Hey guys, I'm about to go in here and get me some of these good old tacos from one of my favorite spots. But today we're going to talk about God's money. Yes, God's money, as my friend Adam Thorpe of True Perception Investments puts it. Check him out. I'll include a link in the description. God's money, all the gods love it. Read any religious text you like and it'll mention God's money. So we know what we're talking about here, gold, okay? Gold. Got a question on the channel from a faithful viewer and member of the MCE crew. How do you buy gold? So we're going to start a series right now, and we're going to answer that question. We're going to dive deep. Part 1 of how you buy gold, paper gold. Let's delve into all of the ways you can acquire it, hold it, purchase it, store it. Let's get into it, guys. Alrighty. I'll be right back with you, faithful MCE crew, once I devour my tacos that I'm about to get. All right, talk to you soon. Okay, MCE crew, the tacos were slamming as usual. Let's jump right into this because we got a lot of ground to cover. Now, gold, acquiring paper gold. This is going to be the first in, like I said, a series. We're going to do one a week to talk about how to acquire gold, how to hold it, how to sell it at some point if you want to. All right, so I want you to keep a couple of things in mind. Number one, this is going to be a 30,000 foot view. As I always tell you, you've got to do your due diligence. You've got to make sure that what we're talking about, maybe it fits into your situation, maybe it doesn't. Some of you could already have a lot of metals in your portfolio already, and you could be fine. You don't need to add any more. Some of you may be just starting your investment journey. You could be anywhere on the map. So that is why you have to do your due diligence. I'm giving you an overview. All right. Having said that, I want to take a pause and I want to review another book very briefly, or recommend a book. We're not going to review it. But this book, Titan, by Ron Chernow. Check it out. If you own a business, if you want to own a business, if you ever thought about owning a business, if you want to know some of the best kept secrets about this American economy and the global economy, especially the petrodollar, look into John D. Rockefeller. This book, look at this. This book is, this is a big one. It's about 700 pages worth of small print. A lot of information in here. And it talks about the origins of Citibank, the origins of JP Morgan, the origins of Chase. All of these financial powerhouses that you might be familiar with right now, a lot of them started up in this book with John D. Rockefeller. You got to read it so you'll know the history of money in this country and in this world. Okay, so paper gold. Now, why are we talking about gold so much? Well, because we've got a situation where we're seeing higher inflation. Gold has traditionally been a hell of a hedge against inflation. And we also got a situation where we're seeing some signs that the dollar, it may be on shaky ground as a reserve currency. And if it ever loses that status, we Americans and people everywhere across the globe are going to feel a tremendous economic shock. Gold has been a currency. Gold has been money. There's a difference. Gold has been money for thousands of years, and it has held on to its value for thousands of years. So that's why a lot of people look at gold and silver too and say, you know what? I'm going to put a portion of my portfolio in these metals in some form or fashion in order to preserve my buying power, okay? So that my money does not erode in value along with the dollar. So who's out there buying gold right now? Well, the central banks around the world are buying gold. We did a video on what China's doing with regard to purchases of gold and how they mine it and keep all of the gold that they mine. Check it out after this video. But other central banks are out there buying gold also. So if the central banks are buying gold, what's that tell you? Okay, it might tell you that they know something that most of the populace doesn't know. So we're going to go over this article very quickly about the central banks that are purchasing gold. Then we're going to get into how you can go out there and start to research paper gold, and maybe you'll decide to make a purchase of that nature. Central banks are stepping up their gold purchases. As always, I'll link to all of this in the description. Recently, it was reported that Brazil's central bank purchased over 62 tons of gold. It was not only the fact that these purchases were made that was the key, it was also the speed. Gold Telegraph noted that 62 tons were bought over a 3-month period. This now puts the national reserves at 130 tons in Brazil. In addition to this, central banks purchased 333.2 tons, an increase of 39% over the 5-year average in the first half, and about 199.9 tons during the second quarter. The largest purchases were recorded in Thailand and Hungary, with an increase of 214 tons. Okay, so again, these central banks are out there purchasing, gold. Egypt's demand jumped by 58.5%, or 14.9 tons. Let's see, who else do we have on here? They got a few. Like I said, I'll link to it. But why are they doing that? Why are the central banks of all people out there buying gold? Well, for the same reasons you may consider it, because gold helps you to diversify your portfolio. It's not correlated to stocks or bonds, okay? And it can just add that all-important little piece of diversification in these times in terms of the asset class. If you've got all stocks and stock market crashes, then you are exposed to all of that. But if you have diversified into other asset classes, let's say you got some stocks, you got your own business, which is going to give you the best returns if it is managed correctly, all other things being equal. You've got some real estate, okay? And you've got some cash laying around, okay, for emergencies, but then you've got some metals as well. That's a diversified portfolio. I'm not going to tell you exactly what your allocations should be, because there are many variables that that allocation will depend on, one of which is your age. Gold is reliable. It's reliable and it's trusted. I mean, gold, like I said, has been a store of wealth. It's been highly recognizable as something valuable for thousands of years. You go back into religious texts that have been out there for thousands of years. They're all mentioning gold. Okay, again, God's money. Yeah, you're God too. Okay, everybody's God's money. Gold is in those religious texts. You have the Romans, the Byzantines, the Incas, the Zulus. Everybody's got their hands on some gold, okay, throughout the ages. So it's highly recognizable, reliable, and trusted. Now, let me just pause on that for a second. We're not going to talk about physical gold right now, but when we do get in that, we're going to get into that. We're going to talk about how to make sure it is real, okay? Everything's counterfeited these days, but there are ways to protect yourself. Gold is an inflation fighter. With inflation clearly on the rise, we've talked about that ad nauseum, it's more important than ever to own assets that may outperform as prices rise. And gold purchases the same stuff in the same quantity that it did 2,000 years ago. Wow, that's a heck of a store of value. But you take that dollar and try to purchase the same thing you purchased 5 years ago with it, ain't going to happen. You're going to need to bring more money, more fiat currency to the table. Gold has zero counterparty risk. Now let's talk about that. The gold market is global, and the metal carries zero counterparty risk. The metal, okay? Paper gold is going to have some counterparty risk, as we will see, but the base metal does not have counterparty risk. Now, what is counterparty risk? It's just third-party risk. So if you invest, let's say, in paper gold, which we're going to get into in a second here, paper gold has counterparty risk in that whoever you're investing with, they're responsible for purchasing the gold, for reporting accurate numbers on their purchases and sales of the gold, how much they hold, and that sort of thing. They are responsible for remaining financially solvent, because if they're not, then there is some risk for you. There's risk in everything. You step out of the door in the morning, there's risk involved. All right, so what we're seeing here is not just central banks purchasing gold. We're also seeing pension funds purchase gold. We're seeing Palantir, okay, the company that purchasing gold. So what are we? What does that tell us? Tell us that some of the largest institutions, the most financially savvy groups on the planet, are acquiring more and more gold. Okay, and that ought to tell us, remember what we do. We look at these guys and we take away from them what they're doing, and then we entertain where that might work in our own economic lives. So, without further ado, how do you acquire paper gold? Well, paper gold can be acquired through a gold exchange traded fund, for example. So, you've got ETFs out there that invest in gold. And I'm not going to mention any specific ones because I don't want to influence you. I want you to do your research and figure out what's best for you. But there are gold backed ETFs. And one of the big things about that is they're affordable. Now, if you wanted to go out and buy an ounce of gold right now, you're going to pay somewhere in the neighborhood of $1,800 to $1,900, depending on the premium that's on that 1 ounce of gold. Because gold is trading at about $1,800. Then, of course, whoever you buy it from, they're going to put a little premium on it because they want to make some money too, right? That's how capitalism works. So if you want to buy 1 ounce, that you're going to have to come out of your pocket with that. But if you get into an exchange traded fund that trades in gold, those shares can be, I saw one that's the shares are under $12 a share. Okay. Now there may be a minimum investment that you have to come to the table with, like maybe $1,000 in order to get into that ETF. However, your subsequent investments don't have to be that much necessarily, depending on what you get into. So we've got affordability in paper gold. The other thing about paper gold is that it is highly liquid. That means that you can trade it just like you would, a stock. You can trade it out there on the open market. You can hit a button on your online broker and make that sale happen. And in Trade Plus 2, you're going to have some funds in your account. We're also going to talk about, I'm not going to do it right now, but we're going to talk about with a buddy of mine, Adam Thorpe. We're going to talk about another way that you can realize high liquidity in gold or silver. So we've got liquidity, we've got the fact that it's affordable, we've got leverage, and what we mean by that is you can trade options and things like that. That's for someone who's very sophisticated in investing. It's not for the faint at heart. It's definitely not for the novice. I am mentioning it simply because it is a way, derivatives are a way that you can make money with paper gold. Would I recommend it? No, because you've got to be extremely savvy in order to make that work. Otherwise, you can end up losing more than your investment if it goes south. What are the cons? Well, one of the main cons is that you don't own the metal. And there is a school of thought that says that you don't own it if you can't touch it. And I agree with that. But when you invest in a gold ETF, you're not actually doing that for end of the world purposes. So, we have a nuclear winter and money doesn't mean anything anymore. And everybody's trading for the last scrap of food with gold and silver coins. Okay, that's not what you're getting into an ETF for. You're getting into this ETF for the reasons we mentioned: affordability, liquidity, because I'm big on liquidity, okay? I've got to be able to make that money do something in my life should I need it to. And those are the reasons why you want to take a look at a gold exchange traded fund. Now, there's counterparty risk involved. And that counterparty risk is, these ETFs are traded and managed by other companies using custodians and sub-custodians, and you got to rely on those companies remaining solvent in order to maintain that investment. So that would naturally tell you that you want to go with companies that are reputable, that have been around for a while. okay, that are managed well. And the last thing I'll mention in terms of the detriments is, of course, the ever-present taxation. But taxation that exists on physical gold as well. So depending on how you make that investment, what bucket you put that in will determine how it is taxed, whether it will be taxed now or whether it will be taxed at some later date where taxes are higher. Okay, that depends on the vehicle you invest in. A gold-backed ETF, what basket, what investment vehicle you put that in health savings account, an IRA, things of that nature. Okay, there are also gold mutual funds. Now, where an ETF tracks a sector or an index or certain commodity like gold, a mutual fund will invest in a collection or basket of different companies that will have something to do with precious metals, like mining companies, for example, maybe gold trading companies, things like that. Now, the difference is the ETF is looking at it from a broader perspective because when you invest in just a collection of companies, you're kind of limited to the performance of those companies, which, again, if you do your research, you'll find that some of these are backed by very big, reputable companies, and some do quite well over time. So there's the ETF, there's the mutual fund. Mutual funds are going to invest in those companies that have something to do with precious metals, and the ETF is going to look directly at a sector or a specific commodity or index. That's how it's going to do its thing and return some sort of or provide some sort of return over time, hopefully. Okay, so when we're talking about investing in paper gold, in ETFs, mutual funds, you got to watch your fees. Okay, you got to study that, get a prospectus, take a look at the fees that are involved, so you make sure that your performance isn't being eaten up in fees because you know you're going to have some taxation there as well. So you want to make sure at the end of the day you're getting something, right? So you got to be comfortable with the fees. You can look into the management of the mutual fund, for example. Now, the ETF is just going to be focused on the commodity or the index. So it's not going to have, a lot of management in there. But the mutual fund will be trading companies and, adding more shares of certain companies, decreasing shares of others. So that takes management. And you want to make sure that those managers know what the hell they're doing. So you want to look into their history. So once you do that, you can start to feel comfortable with such an investment. Now, we talked about the liquidity aspect. It's one big benefit of doing it this way, and the affordability aspect of it. Last thing, storage. There is no storage when you talk about the paper gold investment. A lot of times, Palantir, for example, they bought that gold, $50.7 million worth. These central banks, the gold that they're buying, this is real gold. There is a cost of protecting that gold, okay? And they've got armed guards wherever this gold is. You're not just going to roll up in there and do some sort of heist because you're going to probably get shot dead if you try to roll up on one of these gold repositories. So there's a cost associated, even for the individual investor. You might say, I don't feel safe holding gold at home. You might want to put it in a safety deposit box, and that might cost you money depending on your bank. All right, guys, so I hope you got a lot out of this. Next, we're going to talk about another way to invest in gold. We're going to talk about mining companies. That's going to be the second in this series. I will talk to you soon.